Welcome to the deep dive. This is where we take the information you send our way, really sift through it, and pull out the insights that matter. Think of it as your fast track to getting properly informed.
Hmm.
Today, we're tackling the 2024 annual report from Canadian National Railway Company, CN.
Right, CN, big player.
Exactly. And these reports can be, well, pretty dense. So our mission here is to extract the crucial stuff. What CN actually does, how their finances looked in 2024, and, what the future might hold based on their plans.
Yeah, annual reports pack in a ton of detail. Our job is to make sense of it, focus on how the business segments operate, what the numbers really tell us, and how they plan to create value.
Okay, so let's get into the nuts and bolts. CN's operations. The report really kicks off hammering home safety. They call it a core value.
Right, you see that a lot in this industry.
But it seems like more than just talk. They mentioned restructuring board committees. To focus more on performance and big enterprise risks, safety and efficiency are right there.
That's actually pretty significant. Putting it at the board level like that, integrating it structurally, it signals it's not just an operational thing, but a real strategic priority. Gets consistent top-level eyes on it.
Okay, makes sense. And it's not just the boardroom, right? They have this annual Rail Safety Week thing with Operation Lifesaver, reached nearly 400 communities in 2024.
That's quite an outreach.
Plus, training over 5,000 first responders. On rail safety, emergency response, that seems like a big investment. Why is that so critical?
Well, think about it. If there is an incident, having local responders who know what they're doing, how to handle rail-specific situations, that's huge. It minimizes harm, speeds up the response. It's about community safety, really, a proactive step.
Gotcha. They also talk about advanced technologies for network safety, not super specific, but you imagine data, analytics, trying to predict problems.
Exactly. It's about moving towards predictive capabilities, spotting patterns, anomalies before something happens, things a person might miss. That plus good maintenance, real-time monitoring. It could really reduce accidents.
And then there's the people side, this train tube thing and a Your Actions Matter campaign. Sounds like internal stuff, building that safety culture.
Absolutely. Safety isn't just rules, it's behavior, it's awareness.
Yeah.
These kinds of initiatives, they aim for that peer-to-peer responsibility. Everyone looking out for each other.
Okay, moving on from pure safety, though it connects. They talk a lot about sustain and build service excellence.
Service is key.
What caught my eye was they expect growth from their own initiatives, less tied to the wider economy. Over half their projected 2024 volume growth from, quote, customer-driven opportunities unique to CN. Why is that a big deal?
Well, it suggests resilience, isn't it?
Mm-hmm.
If they can generate growth by solving specific customer problems, building those relationships, rather than just, floating on the economic tide,
Yeah.
that's a much stronger position. It implies they're becoming really integral to their customers' supply chains.
And they mention a balanced approach to capital investment. Investing enough for the future, but being efficient now seems like a tough line to walk in rail.
It is. It's hugely capital intensive. So you need to spend wisely today, but you absolutely have to invest in track, signals, bridges, capacity for tomorrow. It's about smart, strategic bets.
They mentioned their operating plan seems like the employees are on board with it, driving improvements, refining long-term plans for the network, using trains and crews better, like the engineering team having a detailed plan for infrastructure upgrades. How does that translate?
A good operating plan, when everyone buys in, just makes everything run smoother. Fewer delays, more predictability for customers, and that long-term infrastructure focus. That's about making sure the network can handle more freight more efficiently down the line.
They also made a point of saying the network was resilient in 2024, handled those rail and port labor disruptions, the wildfires.
Yeah, that's a major selling point these days. Supply chains get hit with disruptions all the time. A network that can bounce back quickly, that's incredibly valuable to customers. Shows good planning.
Let's look at some metrics they shared. Car velocity averaged 209 miles per day, down just a bit, 2%. Dwell time, though, held steady at 7.2 hours.
Okay, so cars moving slightly slower on average, but not sitting idle for longer.
Right. And their local service commitment plan performance actually improved, up to 94%. Plus, they hit their best ever customer loyalty scores. What's the story there?
It's kind of a mixed picture, like you said. The slight dip in velocity might hint at some congestion, maybe from those disruptions we mentioned, but holding dwell time, improving local service, and getting top loyalty scores, it suggests they're delivering where it counts for customers, maybe focusing on reliability over just raw speed sometimes.
Okay. And they're investing in equipment, too. 2024 saw 750 new grain hoppers, 500 boxcars, 600 ore cars, 150 auto racks.
Yeah, got to keep the fleet modern and diverse. Different customers, different needs. You need the right tools for the job, basically.
They also really stressed being customer-centric,
Right.
working closely, understanding business cycles, tailoring solutions, mentioned projects in Canada and the US. How vital is that deep customer engagement?
Oh, it's paramount, especially in a competitive field. If you really understand a customer's challenges and can offer a specific solution, you build loyalty. You become part of their success, not just a transporter. That's how you find those unique growth opportunities they mentioned.
And investing in their people, too. Launched a leadership program for supervisors, trained about 7,500 employees at their campuses.
Smart. Good training, strong frontline leadership. That feeds directly into better operations, better service, better safety.
Plus, offering safety training externally to customers, regulators, first responders. They even won an award for that first responder training, 15 years running.
Yeah, that shows a broader commitment beyond just their own operations. Good corporate citizenship, you could say.
And they updated their corporate values. Safety, caring, excellence, succeeding together, leading responsibly. Seems to tie it all together.
Values can seem fluffy, but when they're genuine, they do guide behavior and decisions. These seem aligned with their stated priorities, definitely.
Okay, but no report is all sunshine. Right. They lay out the risks. A lot of risks.
Always. It's required and realistic.
General economy, supply chains, pandemics, conflicts, check. Industry competition, check. Inflation, fuel prices, currency, interest rates, double check.
Standard stuff for a big international company, but very real pressures.
Then there's regulation. They specifically called out the STB rule on reciprocal switching in the U.S. and the FRA rule on minimum train crew size, both being legally challenged. These sound like potentially big deals.
Oh, absolutely. Regulatory shifts can really change the game. How
Yeah.
you operate, how you compete, your costs. The fact that these are being fought in court adds a layer of uncertainty for CN and the whole industry.
And labor, always a big factor. They detailed the 2024 negotiations with the Teamsters, including a lockout and ongoing binding arbitration. Though they did ratify deals with Unifor and the steelworkers. Sounds complicated.
It often is. Rail is heavily unionized. Negotiations impact costs, service, everything.
Yeah.
Getting some deals done but having others go to arbitration shows it's an ongoing dynamic situation.
They also flag environmental risks, climate change impacts, cybersecurity, huge one these days, trade restrictions.
Yeah.
The energy transition impacting what they haul, reputational risks, ESG focus, pension funding. Even derailments and operational disruptions themselves is a risk.
It's a comprehensive list. It really paints a picture of the complex world a major railway operates in. They're exposed to so many external forces.
Okay, let's switch gears. The financials. How did CN actually do in 2024, numbers-wise?
Right, the bottom line.
Revenues were $17,046 million. That's actually up slightly from $16,828 million the year before.
Okay, so top line grew a bit,
Oh,
about 1.3%.
But operating income went down from $6,745 million to $6,315 million,
So costs went up faster than revenue.
which means the operating ratio worsened,
That-
went up 2.1 points to 62.9%. Remember, lower is better for OR.
Yeah, 62.9%. Still a respectable number in rail, but the upward trend is what you watch. It signals pressure on efficiency or margins.
And that flowed down. Net income took a big hit, down 21% to $4,448 million.
Wow, 21%, that's significant.
Even adjusted net income, trying to smooth things out, was down 6% to $4,506 million. Similar story for earnings per share. And free cash flow, down 20% to $3,092 million.
Okay, so profitability definitely squeezed in 2024. Free cash flow taking a 20% hit is substantial too. What were the main reasons they gave?
Well, on the revenue side, they said freight rate increases and a weaker Canadian dollar helped.
Okay.
But that was offset by lower fuel surcharge rates. That alone dropped revenues by $401 million because fuel prices were lower. And a longer average haul length also played a part.
The fuel surcharge. That can swing revenues quite a bit based on fuel prices. And longer hauls sometimes have different margin profiles.
Looking at the different commodities, it was kind of all over the place.
A mixed bag.
Yeah. Petroleum and chemicals were up revenue and volume. Metals and minerals, flat revenue but more volume. But forest products, coal, automotive all saw revenues and volumes drop.
Okay. Declines in some key segments there. Coal especially is facing long-term pressures.
Grain and fertilizers did okay. Revenues up, volume slightly up. Intermodal revenue was down slightly, volume down slightly too.
So it really depended on the specific market. Strength in petroleum, chemicals, grain, weakness elsewhere. Not one single trend across the board. Shows the diversity of their business, but also their exposure to different sector cycles.
They also mentioned a specific $78 million loss on assets from the Quebec Bridge transfer, a one-off hit.
Right, accounting for asset sales can impact the numbers.
And interest expense jumped quite a bit to $891 million. They said higher average debt, higher interest rates, and negative currency effects.
Yeah, rising interest rates have been a theme everywhere. That directly hits the bottom line if you carry significant debt.
They also specifically called out the operational issues, the labor stoppages, wildfires as hurting network speed and car velocity, especially out west near Vancouver.
Those disruptions we talked about earlier, they had a real, tangible financial impact through increased costs and inefficiency. Makes sense.
On the investing side, they bought that Iowa Northern Railway late in 2023 and upped their stake in a Nova Scotia railway. Strategic moves, but probably had some initial costs reflected in 2024.
Acquisitions always do. Integration costs, purchase price accounting. It takes time for them to start contributing positively to the bottom line, usually.
Looking at the big picture balance sheet and cash flow, total assets grew, but so did total liabilities. Shareholders' equity nudged up a bit.
Okay, so the company got bigger, but funded partly by more debt.
Net cash from operations was down slightly, about 4%, but capital spending property additions went up significantly to over $3.5 billion.
Ah, interesting. So even with lower profits and slightly less cash from operations, they boosted their investment back into the business.
Yeah, they broke it down. $1.7 billion for network safety and integrity, $1 billion for strategic growth, and about $800 million on equipment.
That's a crucial point. Despite the profit squeeze, they didn't cut back on long-term investment. They're still putting serious money into the network's future, health, and capacity. That explains the bigger drop in free cash flow, lower operating cash in, higher capital spending out.
So, with profits down but investment up, how are they thinking about shareholder value?
Good question. Usually dividends and buybacks are the main levers.
Exactly. They state their goal is consistent returns, earnings growth, strong free cash flow, good ROIC, the usual suspects. And yeah, dividends and share repurchases are the primary tools.
Standard playbook for a mature, profitable company.
Let's look at the dividend. In 2024, they paid out $2,138 million. That works out to $3.34 per share. And that was an increase from 2023, which was $2,071 million, or 3.6 cents per share.
Okay, so they raised the dividend despite the drop in net income. That signals confidence from management usually. They expect earnings to recover, or they prioritize that steady return to shareholders.
And buybacks. They have a program, a normal course issuer bid. The current one lets them buy up to 32 million shares.
Right.
Through the end of 2024, under that specific plan, they'd bought back 13.3 million shares for about $2.3 billion. For the full year 2024, across programs, they repurchased 15.4 million shares, spending about $2.65 billion.
So pretty significant buyback activity. That reduces the share count, which can help boost earnings per share, all else being equal. Also returns cash to shareholders who sell.
Interesting wrinkle, though. Canada brought in a 2% tax on net share buybacks in June 2024. CN accrued a $51 million liability because of it.
Ah, yes. That has a direct cost to buybacks now in Canada. Something companies have to factor into their capital return decisions. Makes dividends relatively more attractive, perhaps.
They also briefly mentioned share trusts, buying shares for employee compensation plans.
Right, so not all those buyback dollars are purely reducing the publicly traded float. Some are earmarked for employees. Good clarification.
Okay, so wrapping this all up, looking forward, what's the assessment? Their priorities seem clear. Build service excellence, grow the business, invest in people.
Yeah, those three pillars make sense. Service excellence has to be the foundation, right? Reliability is what customers pay for. And then you build growth on top of that, fueled by investing in your network and your people.
They're clearly continuing to pour money into the network. Safety, fluidity, capacity, fuel efficiency, resiliency.
Which, as we said, is critical for the long haul.
Yeah.
You can't afford to let the physical network degrade or fall behind technologically.
And the people investment training leadership seems geared towards making sure they have the workforce to actually execute their plans.
Absolutely. You need skilled, engaged people to run a complex operation safely and efficiently. It's not just about the tracks and trains.
They stress disciplined capital allocation, matching spending to strategy, and they nod to needing a supportive regulatory environment.
That regulatory point is key. Given the potential impact of rule changes we discussed, Having a predictable, supportive government framework is vital for long-term planning and investment in this sector.
And finally, they mentioned community engagement, responsible leadership, and of course, the standard disclaimer that the future is uncertain.
Yeah, the necessary caveat. Lots of risks and external factors, as we saw. It's not a guarantee.
Well, that wraps up our deep dive into CN's 2024 annual report. We've hit the business segments, the financials, the challenges, shareholder returns. Well, quite a journey through that report.
It really covers a lot of ground. You get a pretty good snapshot of the company's health and direction.
So here's something to chew on for our listeners. We've talked about service, investment, supply chain challenges, the push for sustainability. Considering all that, what do you think are the biggest opportunities and maybe the biggest hurdles facing CN in the next, say, 3 to 5 years?
Mhm.
And maybe think bigger picture, too. How might shifts in the rail industry, driven by companies like CN, impact the wider North American economy, maybe even your own interests?
Good questions to ponder. The ripple effects are definitely significant.
Absolutely. We encourage you to mull that over and feel free to share any insights or further questions you might have. Thanks for joining us on the Deep Dive.